Hey, this is Matt from InvestiQuant. Today is Tuesday, November 17th, 2020. This morning, the market saw some pretty sizable down gaps in three of the four instruments. The NASDAQ didn't have much of a down gap, but the others did. And since the open, we got a little bit of a test lower, which found some buyers, and we have been trending higher since that initial low made early on in the session. We're holding up near the highs. The S&P and the Dow have not filled the gap. The Russell just now filled its gap. And what I want to do is take a look at this type of activity, specifically what we're seeing here in the S&P and the Dow, because they both have very similar action where the other markets do not, and see what that has led to as we approach the close of the session. So let me hop into Discover here and set this up. We're going to look at it in all four instruments, even though it is not currently true for all four instruments. It looks like it's true for the S&P and the Dow. The entry time that we're going to use is a long at 3 p.m. Eastern Time. It'll exit at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, for opening filters, we had a sizable down gap. And to describe that, I'm going to click down gap here, and then I'm going to use a custom gap size as a percentage of the 5-day ATR. And you can actually look over on the active today section, and this is showing you the information for the S&P. The S&P gap size this morning was down 60% of the 5-day ATR. So I'm just going to type in a little bit wider parameter than that, get a few more samples in here, because that is a pretty sizable down gap. And I'm going to say that the minimum gap size is 50%. So this will be looking at down gaps of at least 50% of the 5-day ATR. And just for reference, so you're aware, the 5-day ATR currently is about 47 points in the S&P. But this will describe the opening location that I'm going to be using, a down gap of at least 50% of the 5-day ATR. Then I'm going to go to the post-open filters and describe the price action of not filling the gap. So the S&P and the Dow have not filled its gap yet, but they're trading up near the highs of the session. So I'm going to click equals in this close and top 25% of the intraday range. And this will mean that at 3 p.m. Eastern Time, the price is still in the top quartile of the intraday range, but it has not traded back to the prior day closing price. So that would need to be true at 3 p.m. Of course, we don't know right now if that's going to be true or not because it's not 3 p.m. yet. But that's what the pattern is going to be based upon. And then lastly, I'm just going to put it in a similar environment of above a 10 and above a 200-day simple moving average, and click View Results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, when you gap down at least 50% of the 5-day ATR. And at 3 p.m., you are trading in the top quartile of the range, but you have not filled the gap, which would mean trading back to the prior day closing price. This is taking place above a 10 and 200-day simple moving average, so in a bullish environment. Historically, the S&P has 39 samples, the NASDAQ 23 samples, the Dow 35 samples, and the Russell 12 samples. And if we look at the win rates on these, we've got the S&P coming in at 64%, so that's been fairly favored. The NASDAQ, very similar at 65%. The Dow, who is also in a similar price action pattern that the S&P is right now, it's coming in at 60%. And then the Russell with the fewest samples is 50%. So 3 out of the 4 of these instruments have favored the long side with this pattern as we approach the close. If we take a quick look at average win, average loss, they are very similar in the S&P. The NASDAQ looks like it's got a larger average loss, and that's probably coming from a couple outliers here recently. You can kind of see that in the equity curve here. In the Dow, very similar average win, average loss. And then in the Russell, which has the fewest samples, the average loss is bigger than the average win. But this pattern, again, is only potentially in play right now for the Dow and the S&P, which we will find out as 3 o'clock approaches, if it is true for those. And they have very similar stats. So win rates, both 60, 64%. So fairly favored win rates, and average win, average loss, very similar sizes there. So hopefully you found that helpful. Good luck the rest of the day, and we will see you tomorrow.